Hi students, this is Balakrishnan. Welcome to Balas Accountancy Special Classes. Well, this is the fourth episode of the chapter Depreciation. In this one, I'll be working out two full-fledged practical questions under written down value method. I repeat, under written down value method. And that too very much confined to your syllabus. However, before I start the sharing session of this episode, let me give you a few tips regarding how to approach in a systematic way an asset account ledger preparation. These are the 5 tips. Well, again, those of you need my assistance or any information from me, please be in touch with me. And this is my WhatsApp number, 7019230629. Please feel free to be in touch with me at any time. Thank you. Well, why I am very serious about these 5 points are that I have seen evidently many of my ex-students seriously losing their marks, heavily lost on account of not having read the question carefully, or in other words, they were a bit casual about these points. So I thought I should emphasize these points here, right? Point number 1, SLM or WDV. Kindly see whether the ledger you have been asked to prepare under straight line method or written down value method. Straight line method means you have to invariably base on the original cost year after year for the purpose of calculating depreciation. Whereas in case of written down value method means you will invariably be basing on the year beginning written down value, okay, for the purpose of calculating depreciation. So that amount has to be your base. So I hope you understood the difference. So if you have not taken care of this method means the complete answer will go wrong and you will not get any marks. Point number 2, financial year end. Well, here very often students make mistakes. They will be presupposed, yes, it is April to March end. Don't be under that impression always. Carefully read. Sometimes the question will be a little deceptive. They will say that calendar year is there, financial year. So January to December. So that also carefully read. Accordingly, you work out depreciation. Else, the complete answer here also will go wrong and you lose heavily. So don't make that mistake. Okay. Next one, chronological order. Asset is to be made in a chronological order. Normal case, year beginning balance, then you can jump into year end depreciation calculation. But many often there is likely to be some purchase or sales. So that also you accommodate within the year. Okay. You read the question and see what are the events that have taken place during the year. Accordingly, date-wise you account that. As far as the sale of an asset is concerned, I have given you enough method how to approach it. Kindly watch my previous video. Fine. Next one, item-wise breakup value. Invariably, there will be more than 1 or 2 items in respect of a particular asset account. Okay, so you kindly show the item-wise depreciation and also the item-wise balance carry forward. Well, this will be very clear to you when I will be working out 2 more sums for you. Thank you. And next one, complete workings ready. This chapter you should approach very systematically. The chapter before preparing any asset ledger account, what you should do is that the entire workings you should very systematically make ready. Workings such as in respect of each item of the asset, what has been the year-wise depreciation, and also what has been the year-wise book value. Further, when an item gets sold, in a systematic way. Find out his profit or loss, what's the amount realized, etc. You should carefully see. Of course, before that, if the item has been sold during the year, the pending depreciation for that particular item during the year, you calculate. Okay, this way, if you approach, you will find we are still very comfortable in preparing the asset ledger. Thank you. Well, students, the first question of the day is question number 15, page 16.57 of DK Goel Cbse 2019 edition. I'm reading out the question for you. Those of you need it to be written, kindly do so that for future reference also it will be helpful to you. Well, it's like this. Ashok Limited bought a machine on 1st April 2010 for rupees 2,40,000 and spent rupees 4,000 on its carriage and rupees 6,000 to its installation cost. On 1st July 2011, it purchased a second-hand machinery for rupees 75,000 and spent rupees 25,000 on its overhauling. On 1st January 2013, it decided to sell the machinery bought on 1st April 2010 at a loss of rupees 20,000. So they are not directly given the realized amount. We have to arrive at it. Anyway, it bought another machine on the same date for rupees 40,000. Company decided to charge depreciation rate of 15% on return on value method. Prepare machinery account for 3 years. Books are closed each year on 31st March. It has been said in KBS exam 2014. Answer hint given by the author is sale price of machine rupees 1,40,305. And the balance of machine account on 31st March 2013 is 1,13,938. Well, whenever you get a full-fledged question like this, just jot down the salient features. Number 1, financial year end is March 31st, or in other words, April to March is my financial year. Number 2, I've been asked to apply WDV method. Number 3, there have been 3 different machines purchased. Number 4, the first machine has been sold out during the year. This process itself will make you very comfortable. Okay, fine. Now let me explain to you the sum already worked out and satisfied by me. The workings, first machine purchased at the very first day of the year, 2,50,000 into 15%, 2,12,500. And I don't find anything else happened during the year. To bank 2,50,000. You'll find that I have added all the expenditure and a single entry has been made. That is better. It will make you very comfortable. Otherwise, if you show separate entry to bank, 3 entries means you will have a little bit problem in calculating depreciation and other things. So I added all the related expenditure also, and a single entry only I made on April 1st. And depreciation already explained you 37,500. Now, how to balance the account? Total behavior side, put the same total across and find the difference. Balance carry forward 2,12,500. Bring it next day, 2011, April 1st, 2,12,500. Since there is only single machine, no breakup is to be shown. Okay. Then I find that the next event, what happened during this financial year is a purchase for 1 lakh, 75,000 plus 25,000 expenditure together. Is it no? 75,000 and spend 25,000 on its overhaul. So 1 lakh together I put it. Nothing else happened. So I'm making the depreciation entry by depreciation. The calculation has to be made. Yes, machine 1, its book value was 2,12,500 on full year 31,875. Yes, I have found 31,875. I placed it here. And the machine 2, 1 lakh. It sustained me only 9 months because it was purchased on 1st July, or in other words, April, May, June, it was not in the picture. So only for 9 months, depreciation happens to be 11,250. You can check all this at your end. Okay. So that also I am showing it here. The total depreciation is 43,125. Now what I need to do is balance my ledger. Total heavier side, put the same total across, find the difference to last 69 375. However, since there are more than one machine or one asset, show the breakup. Yes. This minus this 1,80,625. This minus this 88,750, which otherwise we have shown here also in our workings also we have shown. Fine. And this is has to be equivalent to this one. Invariably ensure that is also there. And bring down the closing balance next year, April 12, 1st April 2012. Balance brought down, as cities have brought down. Fine. During the year, I find that there has been a sale of a machine. The first machine has been sold. Okay. And the details I'm making it for sale. Book value is on 1/4/2012. That means year beginning book value in respect of the machine that has been sold. What has been is 180,625. Yes. And it has been sold after rendering a service for 9 months. How do you know that? When it has been sold on 1st January. That means only 3 months left for the year. That means 9 months only it served me. So proportionate depreciation 20,320. This calculation you please ensure yourself. Book value, year beginning book value, because WDV into rate into proportionate month. Fine. So that being the case, what is the book value on the date of sale? Reduce the depreciation. This is the book value on the date of sale. And they have not given us the realization amount. Indirectly, they said it has been sold at a loss. That means less than 20,000 of this book value only we have realized it. That is 1,40,305. Okay. That I am showing here. 1,40,305. By bank account, 1,40,305. By statement of profit and loss, the loss, whatever has been shown here, or rather it has been given in the exam. And the pending depreciation 20,320 also I am accounting here. So sale part has been properly done. Okay. We find that there has been a purchase on the same date for rupees 40,000. So to bank, third machine 40,000. Indicate this number also so that you will be comfortable. Now year-end depreciation, fine. First machine, no depreciation because it has been sold out. Right? It is not at all in the picture. Second machine, you tell me what is the depreciation I have shown here? 13,312. Yes. How I got it? 13,312. 13,312 is the 15% applied on the year beginning book value. That is nothing but 88,750. Okay. And the third machine, how much I have shown? 1,500. How did I get it? Simple like that. That came the picture only for 3 months. So proportionately I have calculated 40,000 into rate into 3/12. Okay. Because it has been purchased on which date? It bought another machine on the same date, same date of sale. That is on which date it has been sold? On 1st January. So 1st January till the year end 3 months. That's all. Okay. So 1,500. That also I am showing. Together it comes this much. Now what to do? Balance the ledger. Total the heavier side. Put the same total across. Find the difference. Fill against balance carried forward. Again, I am reminding you in your syllabus or till you become a qualified chartered accountant also, this process of balancing a ledger is an essential part of your day-to-day work. So master it. For that purpose, please refer my initial video BA 001, 002, etc. Okay, fine. Now we have to see the breakup of the machine. First machine is not at all in the picture. It has been sold out. Second machine, 88,750 was the year beginning balance. We charged depreciation 13,312. So this minus this much. Second, purchased only the current year 40,000. Having charged depreciation of 1,500, balance is 38,500. These two together comes this value. And these two figures are the answer hints given by the author. I hope each and every entry I have satisfactorily explained. Thank you. Well, students, the next question is question number 16, page 16.58. Well, it is as follows. Samir Transport Company purchased 10 trucks at rupees 90,000 each on 1st April 2011. So unit value is given and 10 units. On 1st October 2013, one of the trucks was involved in an accident and is completely destroyed. Well, we can compare this accident with the sale. Okay, after all, an asset is out from the organization. That's all. Rupees 56,200 was received from the insurance company in full settlement. This can be compared with the sale proceeds. Money came to the organization subsequent to the disposal of an asset, maybe by accident. Fine. On the same date, another truck was purchased by the company for the sum of rupees 1 lakh. The company writes off 20% per annum on the diminishing balance method. The company maintains the calendar year as its financial year. So please take note of it. If you missed this one, you had it. Show the truck account for the years ending 31st December 2014. So 3-4 years we have to show. And the answer hint is given as profit on truck rupees 4180. Balance of trucks on 31st December 2014. 4,28,512. So as you say, let us analyze the salient features. Unit price has been given, 10 units purchased. WDV is the method. Calendar year is the financial year. That means January to December. However, deceptively, they have given that the company purchased on 1st April. So students may jump into and conclude April to March. Be careful about all this. Okay. And one of the trucks in the lot of first purchase has been lost by way of an accident or destroyed, and we have made an insurance recovery also. On the same date, one more unit has been purchased. So just jot down all these points so that you feel yourself very comfortable. Okay. Now let me explain to you the answer that I have worked out for you. Well, first year depreciation workings 2011. I've been careful enough to calculate it for 9 months because April I'm not jumping it for 1 year. I understand the calendar year is the financial year. So 9 months, 20% rate, proportionately 1,35,000. That I was shown here. And a balance in my account. Total behavior side, put it, balance carried forward. Fine. Bringing it next year. Since just a single lot, I am not showing any breakup. Fine. Next year depreciation. This has been the book value on that 20%, 1,53,000. Yes, that I am showing. This is the balance. Bringing it down for next year. Well, in this year, what happened? An accident. One of the trucks, one among the 10 has been lost. Yes, how I have handled it. See that? Book value of 10 trucks, 6,12,000. How did you get that? Yes, I find that. Yesterday's book value, today morning's book value. Right. Out of that, on 1st October, that means the truck served me for 9 months. Okay. One truck has been involved in an accident. So what is the proportionate book value of that particular truck at the year beginning? Divided by 10. So 61,200. What is the depreciation in respect of this particular truck? 61,200 rate into 9 by 12 because it served me up to January I mean, September end only, January to September. So it comes 9180. What is the book value on the date of accident? Book value year beginning minus the till date depreciation 52020. Have been clearly given insurance recovery 56,200. So there is a profit 4180. That has to be accounted. Profit means asset account, truck account debtor to statement of P&L account. That's the general entry I taught you. And the pending depreciation for the asset were destroyed is 9180. We are seeing just now that has been accounted. And the recovery from the insurance company by bank 56,200. And we are told one more unit has been purchased on the same date, October 1st, paying how much? 1 lakh. To bank 1 lakh. Now, depreciation at the year end. How to calculate depreciation at the year end? Go to the working. In respect of the first one, how much is the depreciation? We had a book value 6,12,000 year beginning. Out of that, 61,200 book value lost on account of one unit. Reduced. Balance book value is 5,50,800 at the year beginning. On that, 20% happens to be 1,10,160. So that I am showing here. In respect of 9 trucks, depreciation is 1,10,160. You are likely to make a mistake, hence I am repeating it. Well, we had prior to accidents year end previous year end 6,12,000. And during the year, book value to the extent of 61,200 lost because 1/10 of it. After the accident, the book value is 5,50,800 only at the year end. On that, next year, I am calculating the depreciation. That happens to be 1,10,160. Hence, I am showing here 1,10,160. Now, as far as the next item is concerned, trucks 2, 1 truck only. It served me only for 3 months because 1st October, November, December. 1 lakh into 20 by 100 into 3 by 12, 5,000. That also I am showing. And my total depreciation is this plus this 1,15,160. Now, as usual, I have to balance the account. Total the heavier side, put it the same time, find the difference, this much. And of course, I have to check whether the split amount is okay. Fine. How I got this 4,40,640, this kind of sum, you have to depend a lot on your workings. Yes. Well, this was the depreciation. This minus this 4,40,640. And the other one, how much is that? 95,000. Okay, that's obvious. 1 lakh minus 5,000, 95,000. So that means it's over. However, they want us to prepare the account for 1 more year. Yes, bring down the balance as it is. Yes, it has been brought down. And there is no event happen here, no purchase, no sale, no destruction, nothing. So depreciation, 9 trucks. How I got 88,128? I am depending on my workings. This was the year beginning book value. On that 20%, I got 88,128. And the next one, this was the book value. I got the full year depreciation 19,000. Both the amounts I am respectively shown here. Now balance the account. The account. How do I balance total the heavier side? Put the same total here. Find the difference. That is the way of balancing a ledger. And let me show the breakup. This is only 1 truck, you understood it. I don't have to show it again, I hope. Yes. So, and how the balance? First lot, 4,40,640 minus 88,128. This is the balance. 95,000 minus 19 is the balance. And this together is equivalent to this one. Well, so 2 sums. I hope I explained to each and every entry. Yes, that is my mission ahead. Work out some practical sums as far as possible, the toughest one, and explain to students each and every entry in a convincing way. However, you have to practice nicely. Otherwise, this kind of sums you won't be able to manage within the allotted time. My 25 years of experience in teaching, I endorse the fact very much. Practice makes perfect. I am in a position to explain to any point, but that's of no use to you unless having understood the point, you practice and improve your speed. Okay, thank you. Thanks a lot. Take care. Bye.